Founder and Chief Investment Officer at Shikara Investment, on what the global view is. And Rahul, always great to have you here on NDTV Profit. So thank you so much for joining us today. Let's start by getting your take on, the upcoming Fed meet and how big a driver it will be. I think a 25 basis point cut has now been completely priced in.
Absolutely. I think a 25 basis cut is likely to come here. Though pace of cuts from here to June, one can debate on that. So US economy has been surprisingly resilient. Inflation data cooled off, positively in the first 6, 9 months, but it's been a bit sticky in recent months, and which is why this December cut definitely, and post that one has to see more where does inflation head to get a better idea of the rate cuts.
Rahul, good morning. It's also Samina joining in. How concerned are you about emerging markets at this stage? Geopolitical chaos is not impacting equity markets, but I think the bigger impact that we might have to face is what Trump does in terms of policy action in a few months from now. Is this something that's on the watch list for you, and any sort of trades or deals in the emerging market pack would be dependent on what the outcome is in a few months?
Yeah. So, Samir, like the way you said, we've got to get used to this geopolitical noise. I think what I had in the last 10, 15 years was completely unprecedented. And what we're going to see in the coming decade is going to be something which most participants won't have seen in their lifetimes. So, you were showing pictures of what's happening in Syria. We've got the same thing which happened in Palestine, etc. So a lot of these things, Ukraine, of course, so a lot of these things, one has to get used to it. As long as these conflicts are regional, local conflicts, I don't think it impacts markets. When these conflicts get broad-based, that's where the markets are going to get derated. What happened last week was in Korea, where first martial law was announced and then withdrawn, and they tried to impeach the president. That's not kind of gone through, but that's going to weigh on some flows into Asian EM markets for the coming quarter. From our side, see, the way we're looking at it is right now, everybody is comfortably kind of a position in the US. Most clients are of the view that let's see what happens on the tariff front before we increase exposure to EM/Asia. Now, we don't think the worst case on tariffs actually plays out. See, the effective tariffs US has on China today between 18 to 20%. I don't think those go to 60%, maybe 5% more, because the pain of these tariffs is going to be faced by the US consumers. So one reason why the previous government was kind of booted out was because of high inflation. So I think tariffs are more of a negotiating tactics, but till the time market gets confidence that these are pure negotiating tactics and you have some bit of a rate cuts playing through, I think markets will remain range bound here.
So just to drill down on the point on emerging markets, Rahul, and right now, I think a wait and watch before allocations to emerging markets improve or increase. How is India being seen in that context, considering that it could be a relative safe haven from tariff wars, from all of the geopolitical crisis that we're seeing?
So if you look at India, again, clearly everybody liked India, everybody liked the structural story, the work Prime Minister Modi's government had done over the last 10 years, and the continuity and recent Maharashtra elections victory, which was fairly emphatic, is a positive vote of confidence. All that is like what was not comfortable, palatable for most investors was the high valuations and more in line with the growth slowdown. And look, to be fair, this has been part also orchestrated by RBI in terms of controlling this big growth in unsecured retail credit. So it's good from a medium term perspective, though is a short term pain. What we saw was government capex slow down post elections, which were but natural. So as these things pick up again, I think growth should pick up. And we've been kind of advising investors, our prospects, to look at India around the downticks because that's the best time. That's the best time to enter to Indian equities or add to Indian markets whenever the exuberance is much lower or contained.
Well, you said you've advised your investors to look at India on downticks. How do you define downticks? We are 6% off our recent lows. You want to quantify this for us? Because qualitatively, it's extremely tough to say what is a downtick and what isn't these days.
Absolutely. So I think in a long-term structural bull market, you will have shallow corrections. and that's where one's got to look at. So let's say we find more value in large caps over mid caps. Mid caps, one is fairly cautious, and look, some of these mid caps may even lose you. They've lost 30% from highs, and I won't be surprised if they're down another 20-30% over next 6-9 months. So one's got to be particularly mindful of mid small caps, but large cap there is value. They never really participated in this rally. Particularly large cap banks are interesting. I think there is still interest or value in large cap or technology names, particularly large cap names. See, our view is for soft landing in US. And with the Trump administration, you're going to see the biggest deregulation in the financial sector, which is the key clients for all these IT service industries. What we are seeing is a lot of these pilot projects on AI likely to fructify into large scale projects in the coming years. So that should give them a demand uplift. So banks, IT, pharma, they kind of stand out for us in this in India at this point of time.
Rahul, morning, or rather good evening to you. Just one question, Rahul. While a lot is anticipated in terms of Trump bringing up tariffs against key countries, China plus one, etc., this Biosecure Act, quote unquote, reversal that is coming. I don't know if you know the news, but apparently this Chinese companies, 5 Chinese companies, has been left out. The proposed law has been left out of the key defense bill. Are these developments before Jan 20th when Trump comes into office, or could this actually happen because it has a material impact on non-Chinese pharma firms, including Indian pharma firms?
Yeah, I did see this news needed. So we had, I think, if I'm not mistaken, 5 Democrat kind of a senators who had voted against this. So that is something going to be a near-term negative for the Indian contract manufacturing companies. But look, what was happening also was, if you talk to these contract manufacturing companies, particularly the Indian companies, there was a sense that the Chinese companies were offering huge discounts, huge rebates, because there is a timeline for transitioning out of these Chinese companies, and that was 2032 under the Biosecure Act. So similar to what we saw in the chemical space, where you had huge supplies from the Chinese companies ahead of this China plus one, and that impacted pricing. That was the risk for the contract manufacturing company. I think over next 3-6 months, whatever dips come because of this, one would like to increase exposure to the sector, because look, the valuations are not so cheap here. It's a bit overheated, but the longer term trend is clear that look, China over between 2005 to 2020 became outsized share of global production. And a lot of these things are going to move away. And
But
look, let's look at it logically. You would not source 80% of your production from one supplier. So I think that diversification is but natural.
yeah, but Rahul, quick 20 seconds. But you believe this is pre-Trump, uh, quote unquote, shenanigans? Things could be materially different. There could be a Biosecure Act post Donald Trump coming to power, right?
Absolutely, absolutely. So this doesn't rule out the Biosecure Act, but
Got it.
I think this just makes it difficult before the year.
Before the year. Okay, fine. Makes sense. Okay, great.
Yeah, well,
Guys,
that's of course.
Thanks, Rahul. Thanks for joining in today and giving us your thoughts. Really appreciate your time.